Okay, all right. We'll start then. So today, last week we talked about daily profiles and weekly profiles. Actually, we talked about weekly profiles, and I haven't talked about daily profiles yet. So we'll get to that later. Oh no, these are actually daily profiles. Okay. So we also talked about daily profiles. Okay. And today, what we're going to talk about is standard deviations. Okay. So standard deviations are important because it allows us to predict the range of the price that it might go to. Okay. And you can even predict where it might take a reversal. Okay. So it's a very useful tool. So I thought let's talk about this and we'll look at lots of examples today. Uh, and this is essentially you use the Fib retracement tool, and these are all the values. I put the values here. Okay, so you use all of those values and add them and just save it as a template. So this becomes a very useful thing to use always. Okay, now there are different ways to use it, and there are different things written on this. Basically, for now, let's ignore that. Don't worry about that. I'll get to it when I discuss entries and things like that. Okay. But most important in this is essentially a reversal point. Okay. So, in this whole thing, there are essentially two places where price can reverse. Okay. If you get your standard deviations right, then there are 2 points that you can expect a complete reversal. Okay. One is between 2 and 2.5. Okay. The other one is around 4. Okay. Normally, what they say is that if price manages to go beyond 2.5, then the likelihood of it going between somewhere between 4 and 4.5 is very high. Okay. So that means price will expand up to that level. Okay, so this gives you a very handy way of figuring out how far the price can go and where you might want to take profit, or if it starts changing directions, at least you can predict where it can change directions. Okay,
This is the fifth, same, the
so
fifth tracing, right? So that premium, that all the thing we spoke, the 0.5 and all of that, right? Same fifth tracing. Okay.
yeah, it's similar, but this is future prediction.
Hmm.
Okay, and so basically there are a few places or few ways that you can actually use it. One is something that we call a failure swing. Okay, I'll show you what a failure swing is. Or it can be, you can use the breaker range. And we talked about breakers, right? So the breaker is essentially, that range you can use and use that projection to figure out where the price might go. Okay, I'll show you both. Okay, and different people use it differently in terms of how they use the top and bottom of the fib retracement. You can do it either wick to wick or body to body. Okay, both work. Both will in sometimes give you different values and different turning points. But when you look at it, you will realize that both are equal. Yeah, are both work, and you can use either one most of the times. Okay, and the way you want to actually use it or you want to decide how to set it up right and to verify it is you need to look left. When you apply it, you need to look left and make sure that, you know, between 2 and 2.5, if you look left, then there must be something on the left side which can cause price to change directions or to reverse. Okay. So that is how you can confirm that you have set it up right. Okay, so instead of looking everywhere and you see like hundreds of places from where it can actually change directions, you can limit it to a few regions where you can be sure that okay, this is where I can look for a reversal. And if you actually see that reversal, then you can get out of the trade. Okay. So this is an example. Can you see it?
No.
No,
Go go
readable.
on, go on slideshow.
I think we have
Oh,
option. We have
because
that
the
same.
slideshow, it'll go to the whole screen. Hmm,
You shared this doc, right? It's the same one, right?
Let me see. Yeah, it's the same one. You can look at it on your screen also. Okay. Or it's fine. Is this better?
Yeah.
Yeah.
Okay. So this is one example. I think this was yesterday, right? Or maybe I'm not. Maybe. Okay. So basically, I took this range. Okay. In this case, I've done body to body. Better?
Hmm.
See, this is the body. Okay. Body to body, I took the range. Okay. And I used this range to predict where the price might go. Okay. And if you look at it, exactly between 2 and 2.5, it reversed. Okay. And if you look towards the left, you can actually see that, okay, there is one place here, which could be a place from where it can reverse, or it could reverse from here. Okay. So this way you wouldn't worry about all of these points. Okay. Other you'll start worrying, oh, maybe it'll reverse here. Oh, maybe it'll reverse here. Maybe it'll reverse here. Right? So it saves you that the kind of thing, and you know that it's somewhere in this area is where it can reverse. So you know your draws on liquidity, and you can use those as a means to figure out till when you need to hold your trade.
But what
So,
is triggering you to say that it will go in that range? Because you have put this Fibonacci retracement,
Yeah.
but how are you scroll down?
Mm.
How are you able to say that it would kind of go up?
How am I going to? Okay, so for that, it's a question of bias, right? If you look at this example, you had left side of the curve, which came down.
Yeah. So there was that distribution which happened there.
Yeah, this distribution happened here, and
mhm.
that went into a higher time frame PDRA somewhere around here. Okay, from where I was expecting retracement. So then I can see that it did retrace and it is going higher. So if you see the Asia kill zone and London kill zone, it started moving higher, and prices continued higher before New York started. Okay. So the likelihood of New York continuing to hit the draw on liquidity is a lot more higher in this case because it's come so close to it. Most likely it is going to hit that before it comes back down. It has to take liquidity before it can go down again,
Okay.
right? So,
And
so
why
you
did
know
you choose this particular candle? Or
why did I use this?
that particular time frame? Like what triggered about high and low there?
This one?
Uh,
So this is what is called a failure swing. Okay. So the day started somewhere here. Okay. And then this was the low of the day that formed in a kill zone.
okay.
Okay.
Hmm.
In a kill zone, you need to see where the low is formed.
So what is
Okay.
it called? Fairy of what was that?
It's called a failure swing.
Failure swing. Okay.
Okay. The reason it's called a failure swing is because it failed, it swung down, but it failed to go down further. Okay. Because it came here and then a price displaced higher than this. Okay. And continued higher. So then this became a failure swing.
Hmm.
Okay. So
Yeah.
you
So, but
used,
to your
yeah,
earlier example, right? So it went to two. So you're saying something like if it goes to two, it will keep on going,
yeah.
but it will stop at two. But how did you know it will not stop at -1 or point 0.5, like, yeah, or two?
That is basically what ICT has figured out.
Is it
Okay.
figured out what exactly?
He's figured out
So
that, with a lot of experience, he's figured out that this works. This
uh,
particular way of measuring is what works, and he figured out that between 2 and 2.5 is when you will normally see the reversals. Okay, and
After
when you look
after it
at
crosses.
examples, you will also see that's how it works.
Okay, so after it crosses certain threshold, it will stop at two or 2.5, or like when it will
So
stop.
basically, look, in this case, what happened was it crossed 2.5 and went higher.
Right.
Okay. If you look at probably the next day's price action, it would have gone higher to 4.5.
Mm,
Okay. So it's quite possible that it would have gone higher to 4.5. And I'll show you some examples where it's got to 4.5 also.
mm,
Okay. So this is basically a means of figuring out or predicting the price action as to where. So what would happen? What you would typically do is you use this to filter out the draws on liquidity or to find the correct draws on liquidity, and then you use those as targets. Okay, you can choose to say no. I think it'll go higher than this, so I will hold it. You can do that, but in this case, like you can see, it went there and then came back down before it decided to go back again higher. Okay, so this could happen to you. Okay, so normally you need to be very clear about, okay, if it's reaching this, at least you need to take partials and then figure out if you want to hold it longer or not.
mm.
Okay. Go to the next example. Okay, this is not working. Okay. Um, okay, fine. Is this better?
Yeah.
Oh, Sachin left.
Why did you ask? Is it better?
All right,
I'm so sure.
you're back. All right. Okay. So in this case, I have just taken a few examples of where you can actually do the measurements. Okay. So in this case here, I use the Asia kill zone. Okay. Why isn't the cursor visible? Oh, okay. I don't know why the cursor is not visible. Oh, yes, it is there here. Okay. So Asia kill zone. Okay. I did the same, I used the same measurement. And if you can see, it went between 4 and 4.5. And that was the terminus. Okay. Uh, in this case, I used the London kill zone to do the same measurement. Okay. Went up to 2.5, roughly almost 2.5, between 2 and 2.5. Okay, and came back, reversed. Okay, and then I used this basically 8:30, around 8:30 news, this swing to do the measurements. Okay, this is just before New York open. Okay, and 4.5. This is like way too precise. Okay, so I just wanted to say that you can do the measurements differently, and then but overall it is still something that will work. Okay, you just need to know where to actually do the correct measurements. Okay,
Mhm.
so how do you choose where to do it? Okay, so normally what happens is that we say that a manipulation in price happens in typically in a kill zone. Okay, so it's either Asia, London, or New York, right? New York, but since you're trading New York, you're not interested in using New York AM. You want to see a manipulation happen before that. Okay, so normally in the Asia kill zone, usually Asia kill zone is rare. You will see most of the times the manipulation happening in the London kill zone, like in this case. Okay, because Asia was here, it went up. Okay, since it went up and then came down, this is the manipulation. Okay. When the manipulation happens is when you get your failure swing. Okay. So this swing which happens just before it goes down is called the failure swing.
Mhm.
Okay. So, and then it came down and then went down. So it went up to 4.5. Okay. This was,
Other
I think, Monday or Tuesday's price action.
Other maybe little basic question. So
Oh.
when we talk about all this Asia, London, and all,
Hmm.
right? So
Hmm.
those are the local indexes we are referring to, or the impact on the futures of US index.
This look at it as just one index.
One
There's just
index.
one index, but traders in different zones who are trading the same index.
Okay, so American futures, right? The futures
Yes, it's
they are
all the
trading from.
same. Yeah, everybody's trading the same futures. So all the orders will eventually come to the same place. It's just that people are trading in different time zones.
For American stocks, not like
Yeah,
local stock, like Indian stock or something. This is all
no.
about
This is
futures,
all
India
about the futures index. That's it. They're trading
index.
the index
Okay.
directly.
So the London Stock Exchange opening and closing, does it have an impact on this one? I mean,
Yes,
it's
it
like,
does. It does because this is also listed there.
ah, okay.
Okay, so they place orders probably on the London Stock Exchange, but those orders get routed to the New York, Chicago board, wherever it is.
Ah, but the futures get executed. I mean, those orders get executed during the London time, or it
Yes,
final.
yes,
Oh, it is.
yes.
Okay, okay,
Okay.
makes sense.
Mhm. Okay, so you have to basically figure out which manipulation leg you want to use. Okay, to be able to do this failure swing standard deviation projection. Okay. Apart from something like London, the other failure swing that happens is typically when there's a high impact news. So normally that ends up creating the high and the low. Okay. So then sometimes you use that as a basis to be able to figure out your manipulation swing and then use that for projections.
Hmm.
Okay. So normally 8:30 news is what you end up using for doing this. Okay. It's quite possible that you can use like the previous example, right? Even if there was an 8:30 news, I used a previous um, manipulation leg. So you can do either way. Okay. So but you always have to look for the manipulation. Okay, which is very important. You can't I can't decide that, oh, I want to put the standard deviation on this leg here or on this leg here. You can't just randomly pick a place or this leg here. Okay, it has to be a manipulation leg which you have to use for doing it. Then only it works. Okay. The other way that you can actually do is also you can use the breaker range. Okay. So this part, right? Can you see? This to here is the failure swing. From this high to this low is a failure swing. Okay. So I can use this or I can use this. This is a breaker. Okay. So you can use this breaker also, this entire range. Okay. Also as the standard deviation. To be able to, you can use that to plot the standard deviation and it gives you similar values. Okay. It went to almost minus 4 and then, reversed. Okay. And in this case, I actually used body to body. I didn't want to use the wick, so I used body to body.
Hmm.
Okay.
It's just that at what point it will come down. So it came down till 1.1.5. So that is again depending on the SVG and all of that, right? Like
Yes.
No, no. The thing I'm trying to make is that, as you said, it depends. It matters where you put this thing, right?
Yeah.
Like if you put somewhere after, like, 2 or 3 candles chorke, then
Hmm.
it'll give some different result,
Yeah.
right?
And usually it won't be accurate. There's only
Uh,
two places that you can use it.
uh-huh.
Okay. Either on the breaker range or on the manipulation leg, which will give you more accurate results.
Yeah, but here, why didn't you put it in the black candle, right? That is going down.
I didn't put it just to
Uh,
show you that you can put it on the breaker range. I can put
Okay.
it on the breaker on the manipulation leg also. This is the manipulation leg. This leg is
Which,
the one which created the low, right? And
which,
took liquidity. So no,
uh,
it's quite possible. What I should have done is I should have set higher time frame PD array here. Okay, it quite possible it came, took out some PD array here, and then went up, right? So you can use this leg also to do the same thing. In this example, I just wanted to show you how I can use the breaker because the breaker
yeah.
is very clear in this. So that's
Mm,
why I wanted to use this. Hmm? So sometimes, yeah, when you have news which moves the candles too much, then you can't use that. Or if it has a very big wick, also you cannot use it. So in those cases, you're much better off just using the breaker as the proper
mm,
range rather than trying to use the manipulation leg. Okay, because that'll skew up the whole thing.
mm.
Okay. Yeah, okay. All right. Now let me shift it to the trading view.
London close generally 10 o'clock.
No, London close. Yeah, between 10 to 11.
Pacific.
PST.
No, it's always EST. Whenever I talk, I only talk EST.
Mm.
Okay.
Less
Okay.
specified.
Yeah. Okay. So this is today's action. Okay. So let us see how it looks. I'll put this indicator on so it's easy for us to figure out. Look at this. Okay. So this is London. London created this low, and this is the failure string. Can you see it?
Yes.
Right?
Yeah.
Mm. 2.5, huh?
Look to the left. Okay.
There,
Now
there,
yeah,
right?
it's actually not very clear why it came here, but you need to look beyond. Actually, what happened was it came to this breaker. This breaker was the uh, key. Okay. This was the long thing. So what actually happened here was I have to go to the ES chart. Okay, then you will see it. So ES, what happened was this. I'll go to the higher time frame. And look at the- Okay, this is 1 hour chart. Okay, So if you look at this, this was the high, and this was the essentially a low, right? So this essentially became a breaker here. Okay, if you look at it. So it came up to this level on ES. So NQ also actually just stopped at the same point.
Mm.
Okay, so normally what happens is that NQ, ES, and Dow, they tend to move in tandem. Less on Dow, but NQ and ES. So sometimes what happens is that the target is on NQ, okay, and then ES just stops when NQ hits the target and then changes direction. Sometimes ES goes and hits the target and then NQ changes direction.
Mm.
Okay, so quite a few times you end up trying to use both to able to figure it out. Okay, so let me do the same thing on ES. Okay, so if you look in ES, right, if you look at today's action, in here, London actually took out this low. This was actually Asia low. Okay, why is my Asia not showing? Okay, this was Asia low. Can you see? Asia low was taken in London by ES, right? Can you see it?
Sorry, wait, where exactly? What is the time frame there?
This was a 3 o'clock in ES on ES.
Uh-huh.
Okay, it took out Asia low. Okay, same thing on NQ. It did not happen. Asia low is here, but NQ didn't take it out. Okay, so this was still the right manipulation leg, even though it wasn't the low. Okay, so if you look at it, so that's why I use this as the manipulation leg to predict where it could go. And between 2 and 2.5, it actually reversed. But because it actually hit the target on ES. Okay, so I'll go to ES, do the same thing. Went up to 3.5 on ES. So 3.5 is also one area where I think what I've seen mostly seen is somewhere in this area, it tends to reverse. Even though they say -4 is typically the place, I've seen it hit 3.5 also sometimes. But overall, in general, it gives you a much better idea of where it could probably go to towards. So most of the times you want to take your trade off in and around this area. If you see the same thing on Nasdaq, it's actually done that part of it correctly, the standard deviations.
And what it's trip tracement, right? But that is from 0 to 1. You get all this -2 1. How do you draw this one?
I've in the slides I've given the values. You can use those values.
Okay. How you add those values?
Okay, so when you draw it, it'll automatically come. So I have saved it as a template, so it's easy for me to use.
Um,
Okay, so this was today's action, right? Okay, we'll go to something else then. Um, and this was the breaker. Let's see breaker range. See, this is the breaker. I did it body to body. Okay, in this case, 4.5 terminus.
Mhm.
Okay, so let's do Week to week, same thing. Actually, here, still here, I think. Again, for between 4 to 4.5. Yeah. And you can use this on any time frame.
Mhm.
Okay, it's just that when you use a very high time frame, then it tends to move more into a swing kind of a trade rather than a uh, intraday trading. So, for example, this is 4 hour time frame. Okay, so let's try and see how we can do it here. Hmm, this is tough. Okay, let's just try something and see how it works.
Continue. I'll be back. Let's go.
Hmm, can do this minus 2.5, but this is not the right one. See here, the failure swing is too big. That's the problem. So can't use this. Trying to figure out what is better. Maybe let's see. Wait, three. I just maybe use the last candle. Maybe instead of everything, maybe I'll just use the last candle. So it doesn't, then it comes between minus 2 and minus 2.5, which is where the reversal started.
So, uh, some sort of a stupid question is like,
Hmm.
what is the benefit we get using this?
Price prediction. Because otherwise you can't know how the price is going to actually work, right?
So this wouldn't work for options. It would only work for futures.
Options is just a derivative, right?
Yeah, but still, if
So you're
so
still
many up
trying
and
to
down,
you're
you will
still
lose out.
trying to figure out um, how far ahead the price will move. So this gives you an idea of how far ahead the price could move. So for example, if you're buying at a certain place and you know the price can go at least up to minus 2 to minus 2.5, you can decide if you want to hold the options at least till then and then exit rather than exiting too early.
No, but the thing over there is you would have an impact on premium right away. Now, coming to futures,
Mm,
let's say if I have set a stop loss
mm,
and a profit margin,
mm,
and it's good that it gave me an understanding saying that market can go up
mm.
towards whatever, let's say 2.5 or 4 and so on.
Yeah.
But then if I have already triggered a stop loss,
Mm-hmm.
let's say my profit margin is like $200
Mm,
dollars
mm,
and my stop loss is 300.
mm-hmm.
So when I have said that, because of all that AMD activities,
Mm.
it kind of moved around in a way it could not reach what I was expecting, and it automatically closes my position, right? So then this might not completely help, correct? Or is my understanding wrong there?
Um, yes and no, because the point is what this gives you is an exit point for your trade, right? End of the day, it's about where you're entering and where you need to exit.
In this case, where would you enter and where would you set stop loss?
Well,
because
ideal.
the moment you set stop loss, it will automatically close the position or cancel the position.
Yeah. So
Hmm.
basically, okay, this is a 4-hour chart. Let's assume it's still valid. This is a short, right? So I know that this
Let's
this
go
is
with
the
five
swing,
minutes
right?
because
I know this is the swing, right? And there's been a displacement here. And then I know that it needs to go back up. So this is point 0.5, right? Can you see the point 0.5?
Mhm.
yeah, I can see that. Sorry, Vinay.
So let's assume that I actually put a trade right here. Okay. My stop loss in this case would have been somewhere around here. Let's assume this is the thing. Okay.
So let's do one thing before you move forward.
Hmm.
Change it to 5 minutes, and then give me the same example. Like I'm
Okay.
trying to
Just a minute.
understand because theoretically, what you're saying makes a lot of sense. I'm like, how do we implement it practically? So let's say this is a 5 minute chart. Generally, for trades, you take 5 minutes or less
Yeah,
than that.
it's okay. You can do anything. 5 minutes
Okay.
or 15 minutes, it doesn't matter. But
Okay. Now,
higher
where
the thing, then that is what you would do. Okay.
yeah.
So in this case, actually, what I remember this one. Let's take today's example,
Mhm.
Mhm.
right? Maybe today's example is a bad one because there was news at 10 o'clock.
Let's take yesterday's also. Let's
Okay. Because there was news at 10, but still, it was still,
Today there was a news. Yesterday
yeah,
there was a manufacturing news.
yeah. Today there was news at 10 o'clock. That is why you can see the big wick here.
So,
Okay, so you shouldn't have taken any trade until 10 o'clock. Only after this you can take a trade. Okay, all right. So now I know my 2.5 terminus is here, right? Based on my swing thing that I had put here.
Mhm.
Okay, this was my swing. I know my terminus is somewhere going to be somewhere around in this area.
Mm.
Okay, so but I'm waiting for news. Let's assume I waited for news and then I entered on the next candle.
Okay.
Okay, okay. In this case, okay, I'll just little let's assume up to this point. Let's assume this wick doesn't exist. Okay, since this is order block, I would put my stop loss somewhere. Okay, let's assume here below this candle. Okay, and I would put my target somewhere around between -2 and 2.5. I will probably decide somewhere around here, right? Maybe even -2, just to be safe. Okay.
Mhm.
Mm, because in this case, yeah, I had this fair value gap here and one small fair value gap here. So these could have been my targets, which is actually where it went with. You can see these PD arrays here. Okay. So I would target one of these PD arrays, and I think I would have targeted because they were equal highs here. I would have targeted somewhere around here. So perfect. Yeah, somewhere around here. And then, which is almost -2, I would have exited my trade at there. Okay. So what would have happened is the equivalent when you do your stock option, right? You buy somewhere around in this area,
Mhm.
okay, and you hold it until it reaches this point, until price reaches this point, irrespective of what your option was. Okay, you would have bought a call option, and then you hold it, and then you exit here.
Mm.
Okay, and if price changes direction and starts going down, you basically hold it until the end of this candle, and this would be your stop loss.
Mhm.
Okay. So normally, at least in TD Ameritrade, I know that you can actually base your target and stop loss uh, on the actual underlying stock or index. Or you can actually specify when price reaches is equal to this, then exit for the stop loss or for the target. You can actually do that.
Mhm.
Okay. Um, that's a lot more work, but if you plan your trade properly, then yes, you can do that. You can even do your entry based on what price you want to enter at.
Mhm. Okay.
Does this help?
Yeah, it kind of helps.
Okay. Because meaning holding up to terminus is not something that you should ever do because you
Ah,
never know, right? It can just come up to here and then just reverse immediately.
Yeah.
So you want to exit much before you hit it until unless you have very extremely clear draws on liquidity. In this case, you would have had to go to higher time frame thing. But like I said, in this case, it actually came up to something here, this level here. Maybe let me go to 4 hour. It's actually at the 4 hour fair value gap.
but
It's actually at the 4 hour fair value gap, almost to the tick. Okay, so in that sense, it was right. Okay, and yeah, and this 4 hour fair value gap was a high probability fair value gap because it had this overlapping PDRA. You knew that this breaker was here, so it's quite likely that price could have gone right up to this, but at least it's definitely sure that it's going to touch this fair value gap, and it'll go through this fair value gap.
Okay. One more question. Like
Hmm.
this dotted line, the near the breaker,
Hmm.
how did you add that?
This is just a line.
Oh, you draw that line.
Yeah,
Okay.
I drew the line.
It's not an
No, it's
indicator.
not automatic. No.
Okay.
All the tools that I've used, I've seen, and they don't do these things properly. This you have to do manually.
Okay.
Okay, so you have to go to 4 hours, figure out your actual PDR race, and then you will be able to figure out. See here, this was the high, this was the low. So this became the breaker. That's the reason you draw the line. Okay. And then you see the overlapping PD array. So there that means there is confluence of at least two factors here. So this makes it a high probability fair value gap that is going to at least touch, or it can even go through, and this would be a first resistance point. This line would have been a first resistance. In the case of ES, it actually hit it. It actually hit that line and then reverse. So these prices, the way they manipulate it is, if you look at it right, you'll see that between NQ and ES, they're pretty much correlated. And sometimes you have to watch both to try and figure out, how price is actually going to behave. So sometimes the drawn liquidity on ES is much more clearer than on NQ. Sometimes it's much more clear on NQ compared to ES. So based on that, you need to know which one you're going to follow. But normally between these two, you are covered.
for this one, right? Just if you stay in this,
Mm,
it goes to 2.5. So there is
mm,
a fair value gap there.
yeah,
How much volume in that is there in the fair value gap? We don't know.
we
But
don't
so
know.
it will can pierce through that, or it will come back.
Yeah,
Anything can happen, right?
yeah. So normally what happens is since yesterday there's a big move from here to here, right? The next day is usually a smaller move. It's very rare that you get another big move in another in the same direction or in the opposite direction. It's very rare.
Uh,
Okay, because worst case, if you look at it in terms of premium and discount also, this is huge. It needs to cross this to actually go higher than this. That's a big leap for today, especially with high impact news later in the week. It will not do that. So today's price action was less. Tomorrow's will be even worse. Okay, it'll probably give you just maybe one opportunity, and that's about it. And if you catch that, you're good. Otherwise, not. And then on Fridays, the mother of all moves,
What
usually.
is that? Friday is the date for Fed.
NFP, non-farm payroll. Okay. So once non-farm payroll is done, then after that, price action will maybe become a little more clearer.
So here at this point, we can predict that if it is going to kill the fair value gap, it will go way longer. Is it?
Yeah. If it goes through this and crosses the 50%, then it's going to go higher.
Which is all, but it's already in the 4 to 4.5% range.
Yeah. If it goes till there, it's in the 4 to 4.5 years.
So which will eventually turn back, right?
Yeah.
Technically.
Yeah. It could go all the way till here and then come back down. Can go up to midpoint and then go all the way
Midpoint.
back down again. Or it can go a little more higher also. It can go maybe this, because this is an order block. It can go up to this point, this fair value gap here. There is no fair value gaps here. It's all done. So this is the last fair value gap. It can probably visit and then again start traveling down. Quite possible. See, that's what it's been doing mostly. 0.618. Ignored this because this is Newsweek. Came back down. Then it just went up and down. Then again it's gone. One more leg. Then gone all the way down. Okay, since we're here, let's do the reverse. Let's see. For our chart, swing, manipulation swing, -4.
Better to do reverse or which side it is better to do?
Yeah,
Like when you're looking down,
yeah,
to do reverse and you're looking up,
yeah.
you
You have to do
down.
reverse, right? Yeah, because you basically checking how far did it actually go. It went
Okay.
all the way.
So both sides operates the same way then.
Yeah.
Hmm.
So earlier I on the 15 minute or 5 minute chart I just used this much, right? In the 4 hour I used this, so it gave me a much more bigger range, but it spanned 2 days. Okay, first day it came to -2 to -2.5, which was PM. Well, in this case almost it went here, but then Asia came and up to Asia it came up to -4 and then it went up. So it's still stuck in this range right now, which it'll be stuck at tomorrow also, most likely. Okay. Okay. Let's do something different. Let's do crude. See if it works here also. So crude oil, London. the manipulation here. I normally don't use do this on crude. Let's see. Hmm, it's okay, not too bad. Anything higher is still fine, but at least it went all the way up till there. Into 15 minutes, maybe that's better. It's okay, doesn't matter. I think.
So you took the breaker block. Huh?
No, I'm still taking the failure swing. Just trying to figure out which is the failure swing. Okay, it has to be the whole thing. It's too big. I don't think price is going to come down so much. 68. Let's see. Somewhere in this range. So these could go all the way. See, 4.5 minus 4 and minus 4.5 somewhere around, yeah, 65. Well, we're lucky. We'll get lucky if it goes all the way till here. Quite likely. You go there, but at some time, you never know when.
And we have seen this pattern even with individual stocks also, right?
Yes. Like I said, in individual stock, the problem is because there are so many gaps, it makes it very difficult to figure out the swing pattern and
Why there are gaps?
because it's not traded on a day-to-day basis, meaning on a
Okay.
24-hour basis. So whatever happens in pre-market happens in futures. And because
Mm,
the futures index is essentially the same stocks which are getting bought and sold, right? So when that gets translated back to the actual stock when the exchange opens, there are jumps or
mm.
drops. So and those jumps and drops turn out to be the gaps on the chart. But let's try. Let's see. This is Apple. Go to something which where my gaps are a lot lower. This is better. If I do body to body, it works better here. This is a weekly chart. You see what I did? Body to body of the manipulation leg. This It's pretty much decent. At least it reaches the range. So minus, see, -2 to -2.5 reversed. So if you're lucky, you get if you can figure out the right thing, then you can do your flips. But it works. That much I can see. I know. It's to NVIDIA.
Many gaps.
Almost I have to keep guessing which is the right one. Such in this one. Probably not. Although it went up 0.5, maybe came all the
If
way
you follow,
almost.
if you follow from 16th May, 16th April, what will be that? Yeah, the low point there.
So almost.
Uh, okay,
So
interesting.
if I do body to body, it'll probably be very perfectly accurate here.
Um, so I bought at that point then.
You bought it here.
At what price did you buy?
122 something. As results was happening, right? I thought it'll go up at that point, but after that it came down. The Venus
Yeah,
class
it'll be
is
good to try and predict how much it can go down. Let's see.
uh,
Let's see.
oh my god,
This
don't want to see this one.
no,
90.
but okay. This is difficult to do. Because ideally, you want to put it like here. Mm, high, low, high. Okay, maybe let's try and do breaker. This is the breaker.
80. I think there is at 690. There is a lot of resistance.
100, there'll be resistance.
Uh,
Meaning in this range, because 100 was where it actually,
Started at 105, right? No?
yeah, it went one day, it went all the way to 18. I should have bought it then, but that was tough. I wasn't watching the stock. But right now,
hmm,
good chances again, it'll come back into this area probably. Let's see.
107 it is.
Stocks, how many times should you average?
What in average?
Like, say, I bought it for 125. Now it goes up till 90. So, should I average right now by buying more? And next, let's say it goes to 70. Should I again average it or just stay where I'm?
How much did you buy it?
So I'm
Me,
just
I bought at 124.
That's you?
NVIDIA. No,
Hmm.
NVIDIA I have from the past month.
Oh, okay. Then it's fine. If you bought much lower, just don't try to average it. You never know.
Mine Much higher, lower in the sense I bought it when it was 110. So now it has fallen. It might take another 6 months to go up.
Wow. NVIDIA, I've seen that it comes back.
So, see, in this one, what I tried doing was I just used the last candle.
Hmm.
Okay, with that it came to -2 to -2.5.
Ah,
See, Microsoft,
Okay, wait, hold on. So, see, interesting. Trying to figure out why NVIDIA stopped there. So, this fair value gap. Okay, I'm already in daily chart. Okay, go to weekly. Let's see. Weekly, it stopped at this because of this. This volume imbalance is what it is using. See this volume imbalance, right? So, that's what it's using. So, next target is this low if it happens. But this also, okay, yeah, this came here to fill this volume imbalance. Let's see there.
What's happening with Google?
Google, huh?
Yeah, it's like totally gone.
so there's a risk of it being split. It has all that thing, right?
I'm at huge losses in Google.
Oh, really? Okay.
I am like, oh, okay. Let us put up.
I'm somewhere around here, around 120.
In Google?
Yeah.
Wow.
Wow, mine is 171.
So mine is 175.
Ah, but मेरा ज़्यादा नहीं है 6 हज़ार ही है.
Weekly chart is better
Stocks?
for doing this. See, -4.
It's a weekly chart, huh?
Yeah, weekly chart is much better.
So it would take long time, right, to go back?
No, it's gone up, right?
Let us see. Yeah, this is. Can't use the failure swing. It's too big.
There's a
It will
question,
go
right?
up, meaning God knows when it will go higher again. Yeah.
What is currently right now? How much it is?
See, so basically
146.
on the weekly chart, if you look at it, it came to this order block here and it got stopped here. So it looks like a lot of people have orders at this place. Okay, so the next is this huge big gap hasn't been filled. So it'll try to go here. So this is what 140.
Huh.
So it'll go to 140 or maybe even more. If it tries to cover the whole gap, it'll go up to 138.
Hmm.
And I think that's the max because this area is also very heavily crowded. So they'll not allow price. Look, I'm sure that lots and lots of people who have bought at this level. So they will not allow price to go below this. Or if it starts going below that, then it becomes a big problem. See here also, if you look at it, this area looks like classic support and resistance, right? $150. So, so this is what's holding price back, but it went up, it came back down, it's trying to cross midpoint of this. If it crosses that, then next target is this. It has to come down here. And this is also a mitigation block. So that means lots of orders are here. Lots of orders. This is also kind of a breaker. So this area is going to be critical. So the minute it starts going towards 150, we need to see.
Mhm.
I said it might go all the way till here. But this area, if you look at it, is very congested. So it may not do anything here. Let's go to the daily chart. Daily chart is ugly. Into the stuff that I do. Stupid candle alert here. See, 150.97. Give this shot right up. Came here, and from here it just went all the way till here. 175 and then came down. See this? Failure swing on the daily, right? Can you see that?
Uh,
Failure swing on the daily. Went right up to 4.5. The price went back and forth and back and -2 and -2.5 reversed. Reverse came down and then from here shot all the way till here. So anyway, point is standard deviations work. You just need to figure out where to put it. In stocks, it's very tough to put it. But yeah, if you find it very clear, then you can do it.
you that's what, right? I mean, where to put it is on the art, looks like. I mean, there are so many
Yeah, meaning
variables
on
there.
on indices it's very clear, usually. Okay, because the highs and lows are very clear. So anywhere you see the high or the low happen, that is where you start, and then you look for
But what time
okay.
horizon, right?
Hmm?
Like you weekly, in a weekly, go back 6 weeks, or in a monthly, monthly, like the
It
lows
doesn't
of
matter, right?
which lows, right?
Yeah,
So
so it has to be the lowest low.
lowest low.
Yeah, lowest low.
Okay.
Okay, now I can try and put it to this one also. Let me do that.
Lowest of lows, you said?
Yeah, usually the lowest of lows. Any lows that you make, right? For example, this was also manipulation low. Went all the way, came up to 3.5, almost to 4 before it came down.
So Vinay, you are saying like this is good. When should we actually buy? When it is above something, is it? This would not help us to buy.
No, because buying is when the price comes back to within this range is where you need to buy between 0 and 1.
Okay.
Okay, usually it does that, but that's not evident in stocks.
No, not in stocks, in
Yeah,
futures.
yeah. Trying to see if there's some place that I can able to do. Monthly is right for the stocks. Okay, yeah, monthly is cleaner for stocks.
Hmm. Yeah, monthly seems to be very clean.
So lowest closed candle. This is the lowest closed candle.
85.
4.5. Yeah, but this will not tell you where to buy. Not on stocks. Well, what it can do. Okay, let me see. It went up, and you know that it's going down, right? So let's say this was the high, this was the low. Hmm. So this gave you an indication of -2 to -2.5. Now that here the swing is too big, so you can't do it. So maybe what we can try and do is maybe just do the from here to here. Let's see, to this candle, first candle, just using the first candle. So price could come all the way up to this 120. I really hope not, but I don't know how many months it's going to take to go there. Though. So this is a mitigation block, and this is an order block on the month. It has to get past all of this and come till here, then maybe it makes sense to buy. So your ideal buying place is going to be somewhere in this range. So between 138 to 125. If it goes below this, then we are screwed anyway. Either that or it's going to be around 140.
Mhm.
Purely based on the PDRS. This would be like long term buying where you don't want to look at the stock for another 5, 10 years. Want to accumulate, then probably that's a better place. But this is monthly, it's too much. Hey, weekly also. Yeah,
So when is the Fed rate cut happening?
September. So this month,
Uh,
next week, I
next
think.
month, May 18th, right? Okay.
Mm.
We'll see a lot of big swings at that time.
Yeah, after that, we'll start seeing some swings. But usually they'll manipulate the market anyway. So we have to see how they're going to manipulate it. Okay.
So the
Okay.
central bank's new easy money is expected to last through 2020.